day. This is the Eye of the Storm podcast. Today with the big picture, the technical picture for the S&P 500 and the NASDAQ 100. So I'm going to begin with the S&P and basically just kind of do a quick review of the big picture, because the big picture really has not changed, but we are progressing very well and very nicely into the last minor fifth wave up, which again, according to my particular Elliott Wave count right now, would be suggesting that we're getting to the close to the end or the completion point for primary wave B, which has been in progress since the October 2022 low. And what that primary wave B will consist of, and has consisted of up to right up to the finish, is an ABC of intermediate degree. So the color and the labeling that I'm using is the primary degree is green. Intermediate degree is always going to be labeled in yellow. Minor degree will be this goldish orange color. And then down below that, the minute degree would be the grayish white color. So that is the consistency that you'll find in all of my charts, that on the degree labeling of what I use. So here we have intermediate wave A, intermediate wave B. We've been in an intermediate C wave up since mid-March 2023. Within that, it will consist of 5 waves of minor degree, of which we have 1, 2, 3, and 4. So now we're within minor wave 5, which in and of itself is going to consist of 5 waves of minute degree. Now, that's the level of which I'm going to start today. We're inside this minor fifth wave. I'm looking for the completion point. We've carried forward all of our Fibonacci relationships between the different waves so that we can start to put some framework around where we expect this all to finish. So beginning again with inside that framework, let's start with, we can put up one larger, very large, but it's right now not necessarily consistent with a level that's going to, I think, make sense to us. So in terms of, we're just going to put up a Fibonacci retracement for this B wave, the primary B wave. So we're going to go down and we're taking first just the retracements for that B wave. And you can see that we've surpassed the 70.5% fib level, but basically the ones that matter are 618, which we surpassed at 4309, 4310. So basically 200 points ago. We zipped through that. So the next on the scale, on the Fibonacci scale, would be that primary wave B would be equal in length to primary wave A. So we're going to get that beautiful flat, a flat. And that would suggest that this primary B wave is going to get as close as it can, and possibly even exceed, but as close as it can to 4808. Which is the all-time high that was reached in January of 2022. So what we got going on is the ending portion of it, but we know we have that level, 4808, which is where primary wave B would be equal in length to primary wave A, and put in a beautiful flat correction so far. And then we'd be looking for that C wave to begin. And we'll have, once it does, we're going to have again an initial target for primary wave C of 3,500. If indeed we get up close to that 4808 level, because then we're looking for an ABC flat for this whole thing, which would then in turn complete that cycle wave A. So remember, starting all the way at the top, And in January of 2022, we completed a supercycle wave 3. So that puts us inside of a supercycle wave 4 correction. What's going to consist inside that supercycle wave 4 are 3 waves labeled ABC of cycle degree. So now we're in cycle wave A. What is going to be inside that cycle wave A? 3 waves labeled ABC of primary degree. There's the A. We're finishing the B. We have a C. And we'll put those fib levels together once we have our completion point in and we've started to turn south in a primary C wave. Now, so I'm going to remove that because, well, I can leave them in and I'll tell you why. Because we have not erased the potential or the probability, actually, that the primary B wave will form an irregular B wave. And what that would consist of, being on the degree that we're on, is that it's going to push and move to a new all-time high above the existing high of 4808. Now, is that what I'm looking for? Not necessarily, because we have a lot of different levels in between. But now let me bring this all the way back down. And let me come back down to the daily chart. So now we're on the daily chart. So now, again, building our picture on a Fibonacci basis, we now start putting in where the fibs are going to come in for this intermediate C wave. Right, that's what we're in. We've got the A and the B. We're in an intermediate C wave of primary wave B, the larger move. Okay, so what we have is where intermediate wave C will be at equality or equal to intermediate wave A, and that level is 45.56. We've gotten pretty dang close, with last week's high being 45.60. So we actually went just above it, closed back below it. So it's still there. It's still resistance. A strong enough break above it, which is going to be more than, it's going to have to go maybe up to this 46.03 or even higher. But it does suggest that for intermediate wave C, our next stronger fib level is 1.618. And that happens to be at 49.94. And that puts us in irregular territory because, number one, it's going to be above that existing high at 48.08. So you can see how we need to keep these levels in place as possible targets. Why? Because they're there. We're continuing to, we haven't exceeded it with any great strength, but we need to pay attention because if the market comes down in a 4, but really just roars in this fifth wave up, which it can, and be the extended wave within these minor wave 5, and then that would bring us into a situation where we might get past 48.08 and start heading up into these levels to complete the move. So again, intermediate wave C. Now we can come down. Let me bring it to the 4 hours so we can see it a little bit cleaner. We have inside of this intermediate wave C, we've completed waves 1, 2, 3, and 4 of a minor degree. So we're in minor 5. Excuse me. We have Fibonacci relationships between fifth wave and the first wave. Excuse me again. These happen to be of a minor degree level, but the relationship is going to be the same whether we're on an intermediate degree, a minor degree, or a minute degree, or even lower in a minuet degree. They're all going to remain the same in terms of the Fibonacci relationships. So between waves 5 and wave 1, the first most common relationship is that the fifth wave will be equal to the first wave. We have that level, and that level is 4603. So that's not, in terms of degree, it's not that much further above the 100% level for intermediate wave C. So that part we've already reached. I've not exceeded greatly, but we've reached. So if we get to, and the count fits, so in other words, we finish a fourth wave, we come up in a fifth, and we get to 4603, and the market rejects and turns substantially lower, that could be a completion point. But if we still are, let me go back down to the hourly, because I need to just kind of show you where we're at within all of this. So right now, this is just the very near term, right? I am marking the completion of minute wave 3 of minor wave 5 at Friday's high, which is 45.60, almost 45.61. It was a beautiful rally, and it got right up there, but it was rejected, and the market turned lower. And that's what we needed to see. I had left analysis on Thursday going into Friday that we still had very strong potential that we'd go up, create a new high, get up into this resistance zone, and put minute wave 3 completion up there as we turn lower, because this is for a wave 4. It just was against this as a wave 2 was just way too small. So we needed to get this done so that we could put in this larger pullback. Now, let's just take a look, because again, minute wave 4 is going to be followed by a wave 5, and that's what's going to propel us again to additional new highs above the sequence high we have thus far at 45.60. Now, so what do we look at? We got to go look at the fibs, and they're going to be retracements for a fourth wave. Well, we're going to retrace the entire third wave, which is pretty dynamic. Now, we had a beautiful 1, 2, 3, 4, and then this 1, 2, 3, 4, 5, wave 3. So the fifth wave and the third wave, pretty standard, but it was a beautiful fifth wave that extended. So here we are in the fourth, and here's our fibs. Most common, wave 4 will come down into the price territory of the fourth wave of 1 lesser degree, and that's right there. Not here, right there. Because that to me was within this. That was minuet 4, and this is the minuet 5 to finish minute wave 3. So yeah, that first one was right here. We saw it paused, but then it went through, came back, holding on to. So what do we get here? Well, I don't think this is a complete ABC. So what I can do is I take it down one more. Let's look at the internals here. Well, it looks like it's a 5 down, which speaks volumes in several different directions. But right now we're giving the benefit of the doubt that the fourth wave, minute wave 4, will be a zigzag. Now, I know some of you are already going to say, but wait a minute, wasn't wave 2 a zigzag? Yes, it was. So the rule of alternation would suggest that this will be a flat. But when I break it down to a 30-minute chart, it's not breaking down into a flat. No matter what I'm thinking, it's even if I'm doing A, B, 1, 2, 3, 4, and a 5, it's still going to be like 5, 3, 3, 5, 3, 3, 5, maybe. I'd have to break even further to see what it was inside of there. So what my point is that while we say rule of alternation, and Elliott applied it frequently, and actually we still do apply it, but a hard and fast rule, no. And I'm not trying to rewrite anything that Elliott said. I'm just applying it accordingly as the changes that I'm noticing in an Elliott count in today's markets. So if we get a zigzag and another zigzag, then so be it. What will be more important is the individual internal count. If this is going to be 5 and then a 3 and then a 5, and we end up down here, then actually this is a different level. This is not applicable to the pullback. The pullback here is 0.236, here's 0.382. So to see it come down all the way back to 4,500-ish would be right in line, most common for fourth wave. And look what it does. Puts it into the fourth wave of one lesser degree. All right, this is a small, so I'm going to be looking for minuet, and that's here, not here. So how do we want to take a look at this? I'm going to think that this is an ABC for A. Very possible it is. I'm not going to discount it totally, but I'd be looking for an A and then a B. And to tell you the truth, 1, 2, 1, 2, 3, 4, 1, 2, 3, 4. We get a 5, so we come in below there. Complete 5 down for wave A. And then we go up in a B wave to a 4 and come back down. Now, I will share with you what we have as well, but it doesn't fit this larger count because we can only count really 1, 2, 3. So to think that this is 3, that's 4, and that's 5, and that's the end of it, stretch. But I'm going to talk about it right now because I know that some people are probably going to think, because what happens if we get on this hourly chart or even on this 30-minute chart, we get able to count 5 down off the high, which reach resistance, right? For intermediate wave C, reach the resistance point for minor wave 5. Well, exceeded it. We didn't get quite up that high, but we had some internals, but that was all relating to the third. So the only one we have is that intermediate wave C, which gives more strength that we still have this minute 4 and then a minute 5 to complete the minor 5, to complete the intermediate wave C, and in turn, the primary B wave. So my analysis continues to show that we have, and we're in the midst of that fourth wave, the minute fourth wave. We might get a B wave rally out of this, followed by an additional decline in a C wave. So we get an A, a B, and a C, bringing us back towards this 4503 level. Excuse me. Now, right now on the 30-minute chart, and let me see what it looks like on the hourly. On the hourly, we have the 50 period moving average at about 45.25, 45.26, 25, right in that level. That might put in the completion point for this initial wave A of minute 4. And we get a B, and then we get the C, and it'll be the C wave that'll bring us down to this next level, right? The most common, 0.382 retracement, puts us into the area of the previous fourth of one lesser degree. So it all fits. It all lines up. So that's going to be my expectation. But yet, it's not the turn in the market that a lot of people are looking for. So I believe it's just a minute fourth, and we still have a fifth wave. And that, as a minimum, really is going to likely point us to 4603. So, and that's the minor 5, right? See, minor 5. That's where minor 5 began. And its fibs, the equality, which is the most common, is it would be 100%. And that level is 4603. We do have higher levels, and we'll be able to fill in all of this once we get that fourth wave in and we're running a fifth wave up. Number one, we will be able to have the minute 5 as compared to minute wave 1. So we'll have that to attach to wherever this minute fourth wave ends up getting down to. We will put that in. That'll fill in a lot of this blank here. This big gap between 100% for minor wave 5 and 1.618 for minor wave 5. See, sincerely, I could probably take this one out, which I guess I'm going to right now. I'm going to edit this, take that out, and say, okay, because we've exceeded it so strongly. So what we have next for minor wave 5 is 4603, and then beyond that, we have 4747 or 4748. Now, in terms of that primary B wave getting as close as it can, that would be pretty close. On our big picture, 47.47, that's going to be pretty close to that level. 47.47. And we have 48.08. That's our 100% line. That's our all-time high. So, yeah, you can see how close it can get and still finish primary B and turn this market lower. So, a lot of stuff going on, folks. A lot of stuff. So, but we're in this, what I'm terming are the finishing moves for this larger primary B wave. So again, let's just state it all out now. We're in minor wave 5. We have minute waves 1, 2, and 3 complete. 3 completed on Friday. We're in the midst of that fourth wave, minute wave 4. It projects down to 4,500-ish, 4503, 4503.50 to be exact. We're looking for it to be a zigzag where we're just getting ready to finish wave A. We'll put in a B wave, and you can run fibs once we get a confirmed low or confirmed bottom for wave A. Then we can put in our fibs for the B. And it's going to just be retracements again right into there. And then we get a B wave up, and then we get our C wave down, hopefully into this area. And then we can put our minute 4, we'll add additional fibs, and we'll be off into that final wave. So it remains in place in terms of moving averages. It all looks good. But one thing that I will add in between here and the NASDAQ is the fact that we're starting to hear from some analysts that say that the equity markets are truly getting ahead of themselves. That prices were overpriced. So many of our equities, many of the stocks within the S&P 500 have reached overpriced. They're just out of sequence. And a lot of that has to do with the narrative. And I think a lot of it has to do with how options are trading. I discussed the dispersion trade last week. That still could be in play. And we might still have one more round to deal with in terms of volatility. So it's a volatility trade, which actually definitely doesn't take anything into consideration in terms of, fundamentals, earnings. But here we are entering into earnings season. So you're going to get a lot of talk about, wow, look, see, they're really going there because they're expecting these earnings to really blow the socks off, et cetera, et cetera. Earnings season for second quarter really does kick in pretty strongly next week. We get the balance of the big banks. We get Lockheed Martin. We get Tesla. We get Netflix, all coming out next week. Netflix we got on the 19th. Tesla we have on the 19th. I think that's the week after. That's the week after. All these are the week after. Goldman Sachs is on the 19th. So we have on the 19th, we have Goldman Sachs, Netflix, Tesla. That's the week after, and Amazon the week after. I know we have some additional. Apple is into August. So, and then but we have a lot of the other banks, the regional banks, Lockheed Martin. There's quite a few that are going to be members of the S&P. They're just not on my watch list that report next week. Then we have just that we get the rumblings from a lot of analysts discussing, and one that I will just kind of read what they're saying. And this is Piper Sandler's chief strategist, Michael Kantrowitz, as the market's getting ahead of itself. And so he's talking about is that investors have priced out, traders have priced out the risk of inflation. So in turn, that has led to a rise in price multiples or valuations that have fueled the rally of the S&P 500. Now, that's what he's calling. I'm calling it the dispersion trade, that it's based on volatility, that they're selling volatility in the index and buying volatility of the component companies. And they're doing that versus in the options. So a lot of those trades just, in the dispersion trade, particularly on the side that they're doing it, just props up and propels a rally. And we saw it strongest or very strong in stocks like NVIDIA, which has just skyrocketed. Even through Friday, they got it up to 480 on Friday before bringing it all the way back down to close it below 455, only to start to get bid up again, and then after hour. So it was a lot of stuff happening. So, trying to put that picture together. But what this analyst said, which I think is more important, is that the multiples are moving up right now, not because earnings expectations are really going up, which was the case in the 1990s when we had a massive bull market. And indeed, it was a part of the late 2020 and the early 2021 rallies as we were beginning to come out of not necessarily the pandemic, but we had got into a very low interest rate environment that just continued to propel earnings. So interesting that this is being presented to us at a time when the market is really reaching sequence high and is getting close to the all-time highs, against a backdrop of a month ago or so, where we got that report that is like we're in a bull market, which was strange but true. Okay, so the S&P, that's the story, and also it's also what I'm looking for going into tomorrow. Later today, going into tomorrow, when we get Globex open, then we go into next week. So I'm looking for the finish of an A wave down, get a B wave up, and then we get the C wave down. And that's going to go along with earnings too. So it's going to be a mixed bag. All right, over in the NASDAQ, it's exactly the same picture. So again, let me just pull out to the daily chart. It's going to be the same. We can see here's primary wave A. There's the October low. And so we have now begun a primary B wave as of last October. And then we have within it, here's intermediate wave A, intermediate wave B. We're inside of intermediate wave C. It will consist of 5 waves of minor degree, of which we've completed 1, 2, 3, 4. We're inside of minor wave 5, bringing it back down to the 4-hour chart so we can take a peek. Actually, I don't even need that. I can do it on the hourly. Bringing it down to the hourly chart. There's the minor 4. Here's minute wave 1, minute wave 2, minute wave 3 completed on Friday. Beautiful high from the NASDAQ, shooting itself up to 15,000, above 15,800. All on the back, basically on the back of NVIDIA. It was amazing. Excuse me again. It was amazing. It was amazing to watch and just reverse it just as quickly. And if you were expecting that, as far as trading goes, it did produce some good trades. Gotta say, there were some good trades. Wasn't always as easy, but they did end up working themselves out, and you had some great trades and had some great P&L if you hung out for the whole day. Now, what are we looking for here? Same deal. We reached our levels. We have on the outside, go right back again so we can see it. Go back out to my daily. We have intermediate wave intermediate wave C has surpassed the equality. So I can actually, let me just edit this property. I can take out that 100. No sense in having it there to clog things up, and it has no more potential for anything. This is again that larger, I believe that's the right. That's the retracement levels. So we don't really even need to see those, because next up would be a move to I'll leave the ones that are important. So let me go over to here, go edit here. We don't need any of these. We think we've got the 100, and then we'll use those. So we'll keep those in, because what we have going up, right? So here it is. We've taken all the internals because we've surpassed them, leaving us up to the next level would be wave, primary wave B would be equal to primary wave A at that all-time high, 16,767.50. That's the marker. And we have another number right there as we start to come back down. So again, we're within intermediate wave C, which will then in turn, once it's complete, will in turn complete primary wave B. There's the all-time high, sitting staring us in the face. And you see how high we've got? We've got to 15,800. So we're basically, from that high within 1,000, within 900 points of reaching it. It's pretty incredible, because it's been an incredible run that began at 10,893. That was the low on October the 13th that started this whole rally. And it's a counter trend rally, and it's been a beauty. It's been a beauty all the way. Now, not as always as easy to count, but once we allow the market to show us the path, we're able to follow. And again, within that minor fifth wave, and I'm going to bring it all the way back to my hourly chart, we have wave minute 1, minute 2, minute 3 of minor wave 5. Here are the minor wave 5. What are these? These I got to fix as well. That didn't seem to. Let me get rid of all this nonsense that I don't need, because we don't use them. And we can put it right there. Just straighten that up a little bit. Oh, I know what I did. I took them out before, and that was me putting them back on. Okay, so minor wave 5, we exceeded, now come back down below. We're 0.618. So really, I was expecting that. So our next level, and it didn't break it significantly, because now it's come back down back below it. But I'm looking for, again, that only completed minute wave 3, minute wave 4, then we get a fifth wave. So I think that, yes, we will exceed it, which brings us that minor wave 5, that it's not a rule, but equality, which is the most common between a fifth wave and a first wave, that equality comes out at 16,396. So here we are. Again, just like in the S&P, we will be within 400 NASDAQ points of that all-time high. And is that going to be possible? Well, yeah, it is. If something comes out, we got earnings. We're just beginning the earnings season. That doesn't mean that even though we have 1 or 2 or 3 or a handful of analysts saying, hey, we're really ahead of ourselves, and the multiples are not right, so the evaluations aren't being right, and they're not really matching. We're pricing in that inflation is done, and that may or may not be the case. In my opinion, it's not. So we've just got a great deal happening, and we need to just pay attention. And now follow the market in terms of Fibonacci levels and potential. So even though we may see some strong downside, we need to follow what the Elliott's going to be telling us, what we look for if indeed the market is all done. And there's a lot of things. And so again, Let's just go back to that hourly chart on what we're looking at here. What we're looking at is the possibility that we're going to get a wave 4. So what can that wave 4 do? In the NASDAQ, I'm going to be looking for it a little bit cleaner than in the S&P. But 3.382, see, it already dropped down, touched, and bounced off of 0.236. So again, let me take it down to the 30-minute chart. You're going to see it a little bit different. 1, 2, 3, 4. A, B, C, A. Are we going to get a B wave? And then we get a C wave? A, B, C done, maybe? So we got, there's a lot of potential here. The fourth wave of one lesser degree, again, fits a little bit cleaner here. But again, I'm thinking that we had 1, 2, and it would be here. This is a 3, that's a 4, and then the fifth wave, the 5 of 3, was the extended wave. 1, 2, 3, 4, 5. So that brings us into here, and we really, even at 382, would not be inside of it. So right now, if we're just using it, it's a stretch, in my opinion, but we're there. Fourth wave of one lesser degree, tough call, but maybe the one that's correct. So this is all our possibilities I'm discussing. If that's the case, then we'd be looking for this rally to pick up, right? We don't get Tesla's earnings until the 19th. We don't get Netflix earnings until the 19th. That's Wednesday. So we may flounder around. We may do an ABC, and then we get an earnings that they fall in love with and blast this thing to get our minute fifth wave. That's all the scenario. But right now, I'm going to look for a B wave to bring us down towards that 382. Again, in the NASDAQ, the 50, the 30-minute 50 is going flat. Oops, wrong one. The hourly 50 is kind of cresting and starting to go flat. The 20 certainly is. So, we have a declining. It all fits in terms of just a very short-term move. But we should have a continued support again, 15,670, I'm going to call it. And then we have 608, which is where the 50 period moving average is. And then 15,553, 54 for that 0.382. We have continued support underneath, but I really wouldn't be looking for it right this minute. I'd be expecting an ABC. In fact, I'm not even looking for this to come all the way down here now before it would have put in a B wave and then come back down. So we'll see. So that wraps it up for the NASDAQ and the S&P. Again, larger picture is chugging along in very nicely. And so as far as the Elliott Wave look goes, I won't be making an additional one today. This will serve as that as well, because we're taking a look at this very short-term picture and looking for what we expect to come out of all of this. We put some levels together. Again, once we have confirmation that a fourth wave is complete, or even if we're going to get an ABC, there are fibs that you can throw up and use to get a B wave. If indeed we start to rally off of this level, you're going to look at from there to give you the upside. And that would be a B wave. And then again, you're going to look for C to equal A. That would be the number one. A, C equals A. And you can do that easily by just running those same extensions for the internals of ABC. All right. That's going to be it for the equity markets today. And the next Elliott Wave update will be on July the 17th after the market close.